Greetings, members one and all of the Salivation Nation. Something very weird is happening with gold and silver right now. And a lot of it has to do with the numbers that were released today. Because indeed, inflation is running hot. But gold and silver, well, they're not. Let's explore. Yes, there is the numbers that have come out. We can see it as follows. The US CPI month over month was up 0.4%. They estimated it to be 0.2%. Previously, it was 0.1%. So it's increasing. The velocity of it is increasing even more. That means we lost 4 cents in the dollar, essentially, with the consumer price index. Year over year, for the month of September, 8.2%. They were estimating it to be 8.1%. It was previously 8.3%. And so there is that. It's a pretty big numbers there. In spite of what the Fed is doing with these interest rate hikes at 0.75, that is not enough. It's not happening. And even with gas prices going down artificially, by the way, because we're using the reserves, the U.S. reserves, and that's not what they're there for. They should not be used essentially to politicize. Actually, we just found out today that OPEC was denied the Biden administration's plea for increasing the spigot, and they're making cuts. And so they told him no. And essentially he said, well, can you wait until after the election? And so that is all out today, among other things that are not good and what's happening in this country. For sure, there's a lot of things being politicized that should not be. And oil is one of them. But regardless, in spite of that, inflation is up. And why is that? Why is inflation continuing to rise? Well, there's a lot of money that's been printed. And as much as the tightening that they're doing, it's not enough, not soon enough. In reality, we should have done this a year ago, and the rates hike should have been higher. But nonetheless, there is a fear that it's going to slow the economy down too much. So they're trying to ride this fine line. But the more the inflation goes up, that's going to be even worse. It's bleeding out the value of the dollar. And so that is where we sit today. The dollar is losing more than 3 cents every month now, according to the latest velocity, month over month, in spite of lower gas prices. Now, of course, the gas prices are starting to go up again because OPEC is cutting production, and we're starting to see that across the nation now. But regardless, the dollar is being hit. And not only that, the weird thing with precious metals that we're seeing here, which is kind of ironic, the day-to-day move and the week-to-week move of gold and silver is based off of the bond yields and the dollar index. And right now, the dollar index is down 0.66%. So that's the strange thing that's happening. Now, my feeling is that the reason for this is because they're looking at the employment data. And by the way, the employment data is something that when you look at it, it's measuring all these service jobs. They're not incredibly high paying or high tech jobs or anything like that. A lot of them are service oriented jobs that are being refilled from before the pandemic. And not only that, but you got people that are aching to get back to normal. And I think that is what's happening. People are spending money now because they're afraid that if they don't spend it now, it's going to be worth less. And that's what's happening. And sooner or later, that's going to come to an end sooner rather than later because people aren't getting paid as much. Wages are falling behind. So inflation is really hurting. And so that means that, this employment situation where people are working 2, sometimes 3 jobs. So there's 2 or 3 jobs for a lot of people out there. So you can't count those as individuals, you count them as jobs. And sometimes, like for me, for all intents and purposes, I'm working 2 jobs right now, and with a little small side hustle with a band. But nonetheless, that might be even considered 3. And by the way, I'm paying taxes on that as well. So it is 3 jobs. I am working 3 jobs. Some of you probably are as well. We work hard and we do our best. But nonetheless, we're working harder for less money these days. That's the situation where we're at with this economy. Now, I'm going to be referencing an article here from Kitco about price pressure on gold and silver after another hot U.S. inflation report. They're up, and the released and highly anticipated U.S. Consumer Price Index report for September showed the numbers that I talked about before. 8.2% is the magic number here. And you think about it, where it was from already high inflation numbers last year at this time. It's really we're in double digits, even if you look at CPI compared to where it was last year at this time. And so when you take that into account, the report was expected to come in 8.1% year on year. And we got a hot producer price index reading for September. That is a recipe for continued inflation, which means that the Fed is pretty much have the open door to go ahead and continue with their aggressive policy, or they're calling it aggressive. It's certainly not Volcker aggressive. Paul Volcker, he raised rates at 1% every month. And so likely when the Fed does get together at the beginning of next month, I think the 2nd or 3rd of November, we are going to probably see them do at least a 0.75%. They may go bold and go 1%. We'll see, but likely we're going to continue to see these rate hikes. They really have no other choice. They really can't pivot at this point, even though the UN would like them to do. The worst thing they will, probably the best thing that they will do, according to what the UN wants, is they may not raise rates or go a half point. But I highly doubt that at this point. Their hands are pretty much tied. They've pretty much given a signal. The U.S. Federal Reserve officials have recently reiterated their aggressively hawkish stance on monetary policy, and the markets are reacting to that. And it has kept the general marketplace uneasy for fear of pending U.S. or global recession. But these data being released today have had a strange effect on the markets. Gold and silver down, not so hot, but the stock market is up dramatically, up over 2.8%. It's now over 30,000. The Nasdaq is up over 230 points. The S&P up over 97 or up over 92. The U.S. dollar index, though, is the only one that's down to 112.46 as I record this video. And even cryptocurrencies are up because I guess they're expecting the Fed to do it, and they think that's going to be good for the dollar in the long run. But the dollar is acting as an inverse to what gold and silver prices are doing. Usually when the dollar index is down, gold and silver go up. They did start to see a slight bit of recovery earlier today, but they had a much more substantial drop. But where is gold and silver right now? Well, they are as follows. Gold is down now only $7.10. It was down over $20 earlier in the day, but it is trying to make a recovery from the dollar index being lower. But you would think that would be in positive territory. Silver is down 14 cents. So gold is at $1,667.30. Silver is down 14 cents to $18.96. It took a bigger hit, almost 3/4 of a percentage point drop for silver today. And that means that we're going to have a widened gold to silver ratio now at 88.35. So that is what is keeping gold and silver below, still falling, but nonetheless acting a little bit strange with the dollar index down today. But again, what are they looking forward to? They're looking forward to these rate hikes, whatever it will be. What do you think the Fed is going to do now with inflation being where it is? Many people would think that the Fed would be more aggressive and do a full point rate hike because nothing they've done has worked so far. What do you think they will do? I think it's still going to be 75 basis points in spite of what we've seen now, in spite of high employment and in spite of higher than expected inflation. I believe the Fed is going to continue raising rates at the pace that they have been doing, a 0.75 or 75 basis points. Let me know what your thoughts are below. Do you think they will go higher and be brave and do a full percentage point? Or do you think that they will go lower to a 0.5 or maybe even stop? Let me know your thoughts in the comment section below. Hope you found this video insightful. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.